Can you really get a 2.25% rate in 2026? This is actually true. It's not a unicorn. It's not a myth. It is an assumption. So we're going to mainly focus on, though, is the VA assumption. First things first, what you need to understand, I'm going to talk about this from a buyer's perspective. And then if you are a veteran selling a house, a few things you should know to be aware of as well. This could be a great tool to be able to assume a lower rate on a house that is being sold. Now, as a buyer, please understand this. If they had a $400,000 acquisition and that house is selling for $500,000, you're assuming the loan balance. You're not assuming the sales price. So you have to be able to find a way to bridge that gap because the servicer will not give you additional credit. You're assuming the remaining note on that mortgage. And what does that mean for you? Well, we have options where you could do it with 10% down. I have not come across anything where you can do it with no money down. So be prepared that if that thing went up in value since the time that they took out that loan, you're going to have to bridge that gap to be able to get access to that ridiculous rate that might be in the twos. But it can be worth it if you have the capital. Be prepared for a longer window of time because they have to get approval. The selling side has to have approval from the lender, and their processing time could take, I've heard, as long as 3 months to get these things done. So that's something to think about as well, depending on your timelines for being able to close on a home. Now, furthermore, I'm going to talk about the seller's side. The seller side, because I posted a video about assumptions and I had a veteran calling me out saying I didn't know what I was talking about regarding assumptions because he was able to use his VA loan again. I'm just going to give you some real math here. You have a certificate of eligibility as a veteran. So if you're the seller and you go to sell that home, you are not released from that loan as the seller. What does that mean? That means that your available entitlement from the VA is trapped until that loan is paid off. And here you can see a snip of what's called a certificate of eligibility from a veteran's loan where it shows, in fact, that their entitlement was used. Now, what did that mean? Because this individual knew that they had let somebody assume their loan. This guy was looking to buy in Colorado, and they were looking to buy at $700,000. Now, see the math. If they had $212,000 previously used, they literally have $2,986 remaining available entitlement. And as you can see here, if they're looking to buy a $700,000 house, it ultimately means that they need to put down $177,789. Where does the math come from? Basically, the VA is going to cover 25% for you as a veteran, but if your entitlement is not restored, they will not do it. So the answer to the question of, I was able to do this, don't know how much of the entitlement was remaining, don't know where they were buying at, the certificate of eligibility will tell you. So if you have let somebody assume your loan or you have a VA loan, you can go check what impact will this have on you as you become a buyer after you let somebody assume this loan to determine if your next loan can be a VA. This individual could do a VA loan on his next house, but are you going to put $177,000 down on $700 or 5%, $35,000 into a conventional loan? So it's not to say that you can or can't let somebody assume the loan and still get another VA loan. It's a matter of, are you going to be doing it and putting 0% down on the next house if somebody has assumed your loan? So as a buyer and as a seller, you have considerations there. It can be a great tool to get one of those rates in the twos. And if you're a seller, certainly a way to market your home if things are softer because of higher rates, etc. Hope that helps you out on assumptions. Drop comments about your experience with assumptions or questions about assumptions. Be sure to answer them for you.